All right, guys. So welcome to today's live stream. We have Alex from Bloodphantom81 and Jose from Rico Suave Investing YouTube channel. So we're going to be talking about Alex, how he started investing in the stock market, his journey, and he's going to share with us like how he's able to build his portfolio and really like get like amazing returns. Like right now so far, he made like 90% return on his portfolio. So that's really impressive. So you're going to be talking to him about his journey. And also thank you guys for joining, Travis, Rick, Dave, Anthony. And yeah, guys, thanks guys for joining. But let's just give the room to Alex, man. Can you introduce yourself to us and just give us, for people that don't know you, introduce yourself to us.
Yeah, sure. So my name is Alex. I'm 24 years old. I invest in the stock market just like the rest of you guys. I have a YouTube channel, which is called Bloodphantom81, which obviously has nothing to do with the stock market. But I still like the name, so I'm keeping it. And yeah, so I'm just here in the live stream, chilling with you guys. Looking forward to talking with you.
Awesome. So what do you do like for fun? Like in your hobbies? Do you read books or what kind of stuff do you do on your free time?
Yeah, so like I love basketball. So that means like I love the NBA. I love fantasy basketball and I love playing basketball. So I'd say like that's probably like my main passion right now. But like I kind of just go through passions like as I'm in different stages of my life. Like the last passion I had was like making music. And so like when I was in high school, like I just spent like hours and hours like making music in my bedroom. Like didn't really care much for school when I was a kid, to be honest. So yeah, I just moved through different passions. I think my other passion right now is like cooking steak and just making meat. So yeah.
Nice. I remember you said that you actually saw Jose's comment on a meat video.
Oh yeah, pulled pork. Yeah, I didn't actually see it, but yeah.
It was a joke.
Yeah.
Jose was on a roll, man. He was commenting on everybody's video.
Yeah. I think Gen X is giving him a run for his money, though.
Yeah. Well, yeah. Now he passed the baton, man.
Yeah.
I can't do it no more. I used to comment on everyone's video, be the first one to watch it, be the first one to comment, but then I got a job. So I gotta wait now, So,
yeah.
But now Gen X has picked up the baton, man, and he's growing, and we're so very proud of him, and we love that guy. So
yeah, he doesn't just like comment like, "Hey, great video." He'll like, even if it's like the most simple video, and it's something that Manny the investor said too. Like even if it's like the most simple video, like what is a dividend yield ? He'll post like a 3-sentence like synopsis of like why dividends are important. So like yeah, a lot of effort coming from him.
Awesome. Yeah. Awesome, man. Shout out to Gen X and Jose too, the MVPs of our community. So let's give shout outs to people, man. Tasha, thank you for joining the live stream. We got Kevin, we got Ryan, we got Dave and Jason. Yeah, all good. Thank you. And Manny from the Average Investor. Thank you guys for joining. Anthony, we appreciate it. And if you have any questions, for Alex, just drop it in the comments section. I know Dave asked Rico Suave, but any new kitties? Like he asked, answer that question.
Yeah. Well, I had a Christmas party last night from work. That's why I wasn't able to do Saturday night stocks with Rico Suave, and it was a great time, man. There was drinking and dancing and stuff like that. I was there to take some photos and videos and stuff like that. But I don't date anyone at work, man. I learned that a long time ago, man. Long time ago. Never, ever date anybody at work, because then it makes it, awkward to go back to work, and I'm trying to keep my job, and I love my job and all that. So, but is
that what kitties are? Kitties are people you date?
No, it's just like there's like a person, there's like on the finance. There's like a channel called the Investomania, and there's a reporter that her name is Kitty, and she Jose had a crush on her, so that's why.
Not me, it was you.
No, man, it was you that had a crush on her.
Me.
Okay, doesn't matter. Everybody has a crush on Kitty. It doesn't matter. Okay, let's get back to Alex. But hey guys, thank you for joining the live stream. But how did you get started investing, Alex? Can you share us how you get started investing?
Yeah, sure. So I think why I got started investing has a lot to do with who I am as a person, as well as some of the life lessons I learned as a kid. So yeah, I think I always sought after like an abundance mentality when I was a kid. So like even as early as I can remember, for example, when I was in middle school, we had a student store at my school, which basically sold like snacks, like cookies and Pop-Tarts, and they also sold like other apparel. And whenever I had $1, I would always like buy something at that store. But the key word is like when I had $1, because like I didn't always have $1. And like it got always interesting whenever I had like $5, for example, because then I had options. I was like, okay, do I want to like spread out my $5 a little more, make it last throughout the week, or like do I want to splurge and spoil myself and have like a little buffet here with all my snacks? Because I had a sweet tooth as a kid, and I still do. And like me splurging on myself really depended on the kind of day that I was having. Like, for example, if it was a Friday and I was feeling really good, then yeah, maybe I'll splurge a little bit. If I had a good grade on the test that day, then yeah, I'd probably splurge a little bit. If it was a Friday and I had a good day on the test, then yeah, I'd probably do it. And so like, but on the days that I splurged, like I felt like a king, you know, because like I'd buy my snacks, I'd buy like an extra Gatorade, I'd be on the bus ride home listening to music and just like enjoying like my snacks, right? Mm-hmm. And like I kept thinking, like, how can I make sure that this feeling doesn't go away? Like, how can I always have enough, and not just enough, but like more than enough to just like really enjoy all the things that life has to offer. And like at that moment, the things I was thinking about were like snacks, which is like a very innocent way of looking at the world. I think when I was a kid, the only things I cared about were like snacks and girls, but like I was super nervous around girls, couldn't really talk to them. As you know,
Daniel still is. Yeah.
What? Shut up, man.
Right. But yeah, so I always kind of had that abundance mentality. Like, how can I have more than enough to enjoy what life has to offer? And then as far as like why the stock market, well, 100% of the credit goes to my dad. So my dad, I think he has a Roth IRA, but basically, and like we were not well off by any means, but yeah, he told me about the importance of investing and saving. Like I can very clearly remember like him explaining to me like on the back of a napkin, like what a mutual fund is. And it's like, it's this thing that has a whole bunch of other little companies in it. And like, this is what compound interest is. And like, if you have time, like your money's going to grow a lot. And like, as a kid, it's, you know, especially as a kid, we dream a lot. We dream big. We have a wild imagination. So like that combined with who I was as a person really just set the foundation for Bloodphantom81, you know, which is like increasing my wealth rapidly. So yeah, as soon as I could, I opened up a brokerage first with a company called Merrill Edge, which is like Bank of America's brokerage. I think I used that for a year and a half. I was trading penny stocks. And then as soon as I could open up a Robinhood account, I did that. And then, yeah, for the last few years, I've had a Robinhood account.
Awesome. Yeah, it starts, you know, it always starts with, you started very young and your dad actually taught you about the stock market. That was really awesome, you know. Mm-hmm. Have you like followed somebody, or have you read books about it or watched any YouTube videos when you initially started to learn about this kind of stuff?
Absolutely. I'd say my style of investing when I first started was definitely more about fundamental analysis. So I would read more about how these companies were performing. So I would go on websites like Seeking Alpha. Like the earliest I can remember reading Seeking Alpha was when I was like 18 or 19 years old. Mm-hmm. And yeah, I would just read about like how these companies were doing. And like, as a kid, you're absorbing so much information, and like, there's a comment section. So you're like making predictions on your own. So as far as media goes, I would say Seeking Alpha. As far as books goes, by the time I started reading books, I started to like, what was I? Oh yeah. So by the time I started reading books, I think my style changed a little bit. So I started to trade a little bit more. So there's one book that I read on trading, which like really just changed my perspective on it and like convinced me that, okay, this is something I could do. And it was a technical analysis book. I don't remember exactly what the name is. I'll be sure to, maybe I'll link it in the live stream if I can find it. But oh yeah, the author is Fred McCallan. You can find it on Amazon. You could probably post one of your affiliate links if you guys want. But yeah, so there was that. And then I'd say the book that really changed my mindset on the world is Rich Dad, Poor Dad, which is a classic. So yeah, those books and Seeking Alpha are probably my foundations.
Awesome. A great answer. So we have, let's welcome Matt Money. Thanks for joining, Marie. We got Lydia, Jimmy Duke. Yesterday we saw him on Travis's first live stream. That was really awesome live stream. Travis, way to go. And Manny and Matt Money and Tasha. Yeah, thanks everybody for joining the live stream, Marie. Make sure to like the video, and if you are, you know, you can share it with your subscribers, so that would definitely help us out. And also, if you have any questions for Matt, you know, sorry about that, Alex, make sure you drop in the comment section below, you know. So
you learned very early, Alex, to delayed gratification. That way you get to splurge, you know, at the end of the week. You know,
exactly.
So that's a very, very valuable lesson that a lot of people do not like to do not like to learn, because if people they want it right now. They want everything right now.
Yep.
You know,
Yeah.
my family, for example, they believe that, what if I die tomorrow? Well, they're still around. You know what I'm saying? They were always like, they will always splurge on that day, because that fear, that thought of, what if I die tomorrow? Then
Right.
I don't get to enjoy it. Well, you're probably not gonna die tomorrow. You know what I'm saying? So
Yeah.
they don't, they didn't believe in investing or saving, and I'm glad that you learned that at a very young age.
Yeah. The funny thing is, like, all the stuff that we spend money on, like day to day, maybe if it's like an extra drink when you go to a restaurant, or maybe it's like ice cream at the end of the week, like there's nothing wrong with treating yourself. But like if you're buying pairs of shoes every week, like think about how little time it takes for you to get tired of those shoes, or like just not excited about them anymore. Like 4 weeks after I buy a brand new pair of shoes, and they just become another pair of shoes that I already own. So yeah, that's the motivation.
Yeah, I remember watching, like, I took a psychology class. You've probably taken it. There's like an experiment that they did, like with young boys. They were young, and they offered them, chocolates, and they offered them, hey, you can eat this, or you can eat this marshmallow right now, or if you wait, for 30 minutes or something like that, we're going to give you another one. So they left them on the room, so two of the kids, they're sat there, they're just watching. So they have like a camera, and they recorded them. So they were so tempted. Like one of the kids, like they didn't want to see the marshmallow. The other ones, they were like, and so they tested them out, right? So a few of them ate right away. They didn't want to wait. The other ones, they just blank. Yeah, they just didn't eat. So they followed these kids as they grew up. So the kids that delayed their gratification actually were able to do better than the kids that actually ate their marshmallows. So that was actually psychological stuff that they did on site. I watched that video on psychology. Yeah, that was interesting. Anyway, man, that's you learned that at a very young age, man. So that's why you're a baller right now, man.
Yeah.
No, I was just joking, man. But okay, so you start, right? So what is like your investing strategy? As you mentioned, you fundamental analysis, technical analysis. Also, you made a video about like technical analysis. So tell us about what's like your core of your strategy when you're trying to buy stocks, or when you start to invest,
Yeah, absolutely. I basically put my money into assets that I think will be worth more later. And like, that's basically what the purpose of investing is. But so as you guys know, I'm really big on technical analysis. So I'd say that's the majority of my trading philosophy, which I'll touch up in a second. But as far as my investing philosophy, I do invest a little bit. So I basically have an M1 Finance account that I go over like maybe once a month or something like that. As far as why I pick companies to invest in, my investing philosophy is really simple, because I'm actually not that good at fundamental analysis, nor do I do it that often. But yeah, my other philosophy is pretty simple. So basically, it's either one or two things. Number one, this company should be in a sector that's at least growing or sustaining itself. Or number two, I have to believe in the brand. And so that's basically like the observational side of things, right? So like I started picking up shares in Uber and Lyft recently. I think Uber still has another drop to go, which I'll probably average down on it. I'm prepared to do that. Starbucks is probably another one, which is like, I believe in the brand. I believe in their growth. That's like just observational stuff. But as far as like the success of the company, which I think is also really interesting, the only thing I care about is consecutive years of dividend increases. And like, that's it. So that's how I define what I should invest in. There's that observational side, and then, which is, do I believe in them? And then there's that like success side. Is the company successful? I think anything more than that might be overkill, to be honest, when it comes for a long-term portfolio. Like if you have a portfolio of like half of the largest dividend aristocrats, like you're probably going to kill it. You're probably going to do really good because these companies are really good, So that's my investing philosophy. Yeah.
Awesome. Yeah.
You DGI like my man Jason.
Oh, hang on.
Jason said, yeah, DGI. Yeah. Speaking about, so Lydia asked you, how old are you, Alex?
Oh, sorry. The audio cut off for a second. Can you repeat that?
Oh, so Lydia asked you, how old are you? Let me put it on the screen.
Yeah, sure. 24.
Yeah, awesome. Yeah, so he's 24 years young. Yeah. Also, so Uber, invested on Uber. So yeah, Uber, there's an article that came out about, they released a report about the sexual, like, something that happened, the salts that happened in Uber's like almost like 3,000 and above. So that stock actually went down like a little, it sold off a little bit. So they that was kind of weird, you know. They
Right.
reported that. Yeah. Have you seen those articles? So there was reporting. Have you seen that? Yeah. That was interesting. But the stock actually, let's see, they had a new CEO, I think, right? The guy actually bought a lot of shares. I watched that I'm not invested in Uber, but I watched Financial Education's channel. So he talked about how the CEO bought a lot of shares from the company. So he believes in the company, and the stock actually bounced back pretty well from the lows. So, but still, that report that they released, kind of the stock actually dipped, So I wanted to ask you also about, so when you actually looking to enter the stocks that you want to invest in, so you wait for technical analysis, right?
Yeah, a little bit. So I actually like to just like separate the two. So my long-term investment philosophy is just basically like what I described. As far as like and I don't really use too much technical analysis for that. For long-term investing, it's just like, okay, if there's a dip, I'll probably be more aggressive. If there's a really good buying opportunity, I'll probably be more aggressive. But I generally use technical analysis more for the trading stuff. And for trading, I would say I'm a swing trader, and that's where I make that's my bread and butter right there. And I'm always looking for like 10 to 20 to 30% gains on stocks that I can swing trade. And that's basically how I can compound my account so quickly. Is like, if you can increase your account by, let's say, 10% a month, that's a very hypothetical, right? That's not realistic. But if you can do that, consecutively, then your account's going to grow really quickly. And so that's basically my strategy. And basically with fundamental analysis, what I do is I start at the very top. I say, okay, how's the overall stock market doing right now? And what's my 6-month to 12-month outlook? Am I bullish? Am I expecting a pullback? And I have certain sort of criteria or certain things I'm looking at for when I make that hypothesis, but it all starts at that hypothesis. Because let's say, for example, which right now I'm very bullish on the stock market. I don't care that we've gone up for the past 10 years. I'm still very bullish right now over the coming 6 months to 12 months. So given that, I'm buying very aggressively, with the overall stock market, but also any kinds of buying opportunities. 3M is probably my 4th largest holding, and I think they're maybe like 35 to 45% below their all-time high. I think they're going to blow up pretty soon, meaning I see a lot of upside. But when you have that thesis, that overall thesis, okay, I believe in the stock market long-term, then you can start to break it down a little bit. Okay, like what stocks are showing the best buying opportunities? And then you could even break it down even further. Like, okay, what about next week? What do I think about the stock market? If I think the stock market is going to go down next week, I might get out of my positions that are more leveraged, maybe like more tech heavy, and invest them into more reliable stuff. Like I think SPHD is probably my 4th largest holding. So yeah, that's basically my technical analysis strategy.
Cool. So you look at for macro analysis. You look at what's the stock market going to do, or are you bullish? Are we bullish, or something that kind of sell-off might happen in the next few months? So you look at the entire economy first, the stock market, and then you kind of go into the micro. That's like the way like hedge funds and kind of these big traders kind of approach it. They look for what's going to happen, in the next 3-4 months, or like even a year ahead, then they make the decision ahead of time, So
Absolutely.
That's really, really awesome way to do it. I have more questions about.
Yeah, I like your video you made about the technical analysis, being a fairy or whatever.
Awesome.
That was a great video, man. Great video.
So there's a question from Dave. He was asking you, does Alex use options at all? And also, welcome Citizen of the Year. Thanks for joining the live stream. Appreciate it. Make sure to smash the like button. Yeah. So yeah, do you do any kind of options? Dave was asking.
Yeah, absolutely. So I usually just trade options when it comes to ETFs. And I actually feel a lot more safe about going really heavy on buying ETFs than any individual company. I usually don't talk about options trading though, because I really don't want to recommend it. And anything that's leveraged, I've never had a good experience with sharing that with anyone. I mean, on the live stream, I have no problem with, sharing this as long as it comes with a disclaimer, but yeah, I do trade options when it comes to large ETFs like QQQ, which follows the NASDAQ, and then SPY, which follows the S&P 500. But at this point, my niche is with QQQ because I think tech moves a lot faster than the S&P 500 or the rest of the stock market. So yeah, I have some calls that I'm up like 11% on, and it took me a day to get 11% profit. So, stuff like that happens and just like really accelerates the account. So yeah.
Wow.
Yeah, I agree. Like options is like really, really dangerous, and I don't recommend it to anybody, to get involved with options because it's super, as you said, it's super leveraged, and the odds of when something goes against you, it can go against you like a lot really quickly, So I don't recommend anybody do that.
Yeah, I even have to catch myself sometimes because sometimes I think like, dude, if I put like 3/4 of my portfolio in some calls that expire, let's say 4 months from now, and the market only has to go up like 5%, like, dude, my account's gonna kill it,
Yeah.
And so, yeah, I have so many moments of temptation where it's like, I feel really strong in my convictions. It's like, there's nothing stopping me from like, just going for it, just like putting all my eggs in that basket and just like, getting a $300,000 account or a $400,000 account, like I've thought about it so many times, but like all it takes is one screw up and like I'm toast. And like, it matters so much to me that I have this portfolio. Like, I don't think I could do that to myself.
Yeah.
So I
like, sorry, but I like the way that you kind of, that's like from experience, you get that everybody gets the urge, to actually leap and make a lot of profit, especially when you kind of experience options, the gains that you can get from options. You can make like 100%, and then you kind of get tempted and you start hearing those voices in your head. You're like, hey, let me put all in, and then I can make 100% return and 300% return. Like you're, what I'm saying? That's kind of, everybody gets that urge, it's like, but however, through experience that you kind of have to know that emotion happens and you have to let it not take over, so that's when you get from experience, so I like the way that you're honest about it,
Yeah, absolutely. And it's like, it's easy to get a big head too, like, because my account grew so quickly, but I have to make sure I stay out of my head. I can't be like, oh, I did all this cool stuff, I can grow my account quickly, like, don't worry, I'll be fine. But yeah, that'll lead to my demise for sure. So it's about checking myself too.
Yeah, always have to take note of the YOLO demon.
Well, what it is like people, what was it? I was watching a video about the some kind of law where the people that are overconfident are people that are really shouldn't be overconfident, and then the people that really know their skills or whatever, they're actually underconfident. You know what I'm saying? They're not as confident. Like they interview NBA players and then they interview like people that play ball on the streets or whatever. Mm-hmm. And the people that play ball on the streets thought that they were better players than actually people in the NBA and stuff like that. So people always like overestimate their skills and stuff like that. And that could be very dangerous in the stock market. Very dangerous.
Yeah, absolutely. Yeah. I think some definition of intelligence is like self-reflection. So if you constantly doubt yourself, it usually means that you're smart. And then the other thing is that there's this like ancient Greek philosopher which says, I think I'm stupid, therefore I'm smart. And you're completely right. And also at the same time, there's that balance, right? Because like, if let's say you're actually smart and capable of doing stuff, but you're constantly doubting yourself, like that's not good either. So you got to fall somewhere between the spectrum for sure.
Cool. So that great way of putting it. So we have a question from Kevin is asking, what were some obstacles that you had to overcome while learning to swing trade? That was a great question because I wanted to ask you about that too. Like, how did you get involved in swing trading and things like that? So what was the obstacles that you, while learning swing trading?
Good question. I mean, it was really hard at first, if I'm being completely honest. And I think when my Robinhood account started, it didn't really go anywhere because I was just like doing YOLO stuff. Mm-hmm. And it's hard to know where a stock's gonna go. Like, how can you ever in your wildest imagination feel like, okay, with 100% certainty, I know the stock's gonna go up or down or sideways, because stocks only go in one of three directions: up, down, or sideways, right? Everything does. So it's like, how can you know that? But it's really just a matter of trial and error, honestly. And like the first couple of years, I didn't profit just because I was still learning. So one thing, especially with technical analysis, is like there's so many negative people out there when it comes to technical analysis, and just like all that stuff doesn't exist. Just like my last video, like Jose was saying. And it really feels like just this complete joke, right? But the only way to make money on investing is through fundamental analysis and like understanding the business and looking at their balance sheets and things like that. So yeah, this technical analysis was this thing that like only I really believed in. And yeah, it was definitely difficult at first, especially when I was wrong. It was just like, why am I even doing this? But yeah, I just stuck with it.
Awesome. So you trial and error, that's exactly what happens with people. And when you're trying to figure out like what is your setup that you want to trade or what kind of trader are you. You have to pay like they call it like market tuition. You have to just allocate a small portion of your portfolio to experience, to get that experience, and to get, you know, to figure out yourself, your personality, what fits your personality type, what kind of trader that you want to be. So you still have to put up at first certain capital to learn. You know, so.
With market tuition, especially because that market tuition, you pay for it with your own money, first of all. You also pay it emotionally, because like when I was in college, that's when I traded the most. I would just like put all my money into this, you know, into really leveraged stuff, and I would just like watch as my portfolio would swing wildly. And this was like as I was, you know, taking classes and things like that. So I really shouldn't have been doing what I was doing. But yeah, some mornings I would wake up and there was just like a pit in my stomach, because I would look at my account and I'd be like, dude, I just lost like 60% of my account. And I'd feel like crap for the rest of the day, you know? And it's like, yeah, so you have to pay for it emotionally, mentally, with your own money. But and that's actually why I took a break, because I was like, I don't even have any more money left. And also like I'm super down on myself. Like I don't really think I could do this. So I took a break from trading sometime around my first or second year of college, and then I picked it up again in my fourth year of college, and then that's when I like approached it with a clearer head. So yeah,
definitely, it definitely comes with, you have to allocate that the capital, also the emotional toll that allocates, especially when you're starting around, you don't know what's going on, and it can take a mental toll on you because you're investing a lot of time studying it and you're not looking at the results, so it can be discouraging at the same time and also demotivating. So really glad that, you know, you overcome that. Now you look at you, man, you're balling, man. You made 90% return, man. That's what I'm talking about, man. That's motivation, man. That's what I'm talking about. So, wow, look at that. Buying some motion, man. Thank you, Marie. We appreciate it. Watching out for the YOLO demon. Yes. Watch out. Yeah. That thing can really tempt you, you know, that can really affect your decision making when you're trying to think about that. You know, that can leap, your account can go 100, 200, 300%, and then you go all in. And some people take it to the next level, like borrowing credit cards or to buy an option. That's like a next level YOLO, you know? So yeah, I don't recommend that.
Never risk more than you're willing to lose.
Yeah.
No matter what. You know what I'm saying? This never risk. I started trading options. I was willing to lose $25, bro.
That's good.
That's what I lost, $25, man. And then after that, I was out. I'll leave that game to you guys. I'll leave it to Daniel and all that, you know, the expert.
Dude, even Daniel's account's killing it. Like I saw your most recent video. I'm just like, man, like you started with like 100, right, or something like that, and you grew it to like 1,000.
Yeah. Well, there's like strategies like managing and stuff, but yeah, I just have to really be careful. You know, as I said, like you have to approach it with the mindset of risk. You know, that you're risking something. All of this can go to zero, so you kind of approaching it in a defensive kind of way, not like offensive. Like, hey, I want to make money. You know, it's like, hey. The way I approach it is I'm protecting my portfolio, you know, so that's why I look at it very defensive, you know. I don't just buy options or that kind of stuff. So anyway, let's just get back to you. We had a question for Alex. Jamie asked a question, but I'm scrolling up and try to find it because I saw a great question, but we got a lot of comments that was coming in. But Jamie, thank you for joining the live stream. We appreciate it. And he was asking you about, does earning reports or anything like that affect, you know, for your holdings when you're holding your stock, your portfolio, when they, let's say, for example, you're holding, what was the stock? J&J News comes out, the stock drops like 10, 20%, or Dollar Tree, I think recently just dropped like crazy. Like, how do you cope with those huge like drawdowns, or like when it takes a huge dip? Do you average up? Like, what do you do in those kind of situations? Like,
right. Actually, I don't really pay attention to earnings reports or news at all, and I think the only thing it does is cloud my judgment into what I actually think about the company. If there's something that's like really broken with it, you know, first of all, that'll probably make me turn away from the company. But if there was truly something broken with it, like the stock price would get just plummeted. So yeah, I usually don't pay attention to the news. I think the only thing with earnings reports is I'd say they're slightly different than news in that if I'm trading, especially if it's leveraged, I try not to trade around earnings reports, just because like random stuff can happen all the time. Even beyond just earnings reports, but like also like the Fed reports. I think they report like once every quarter. If they're going to talk about interest rates, whether they're going to raise or lower. I personally don't think that the Fed has as much power as they think they do over the stock market. I think at most of the times it's out of their control. But I will admit that there's a lot more volatility that happens around those meetings than any other time. And if I'm caught, way too leveraged in something, then yeah, I could potentially really hurt myself. So I only pay attention to these things as they can affect the price, but not so much like because of the content of them. I hope that makes sense. But like, for example, if there's like either bad or good news, I don't look to see, how it affects the company, because I think, stock market media is actually really dishonest. And I think a lot more bad news happens when stocks are at all-time highs or just really overbought. And a lot more good news happens when stocks are oversold or a lot below all-time highs. And yeah, basically one of the main reasons why I think that is just because we as humans, whenever something happens to a stock, like let's say a stock goes up by 3%, our first intuition, our first question is like, okay, why did that happen? And that's because it's a natural thing for humans to want to understand things and why they happen, right? They might get a little frustrated if they don't know why it happened. So, there's a perfect outlet for that, which is the stock market media. And the stock market media basically is incentivized to drive as much traffic to their website as possible. So whenever you have something that happens to a stock, like wild swings, 3%, either positive or negative, these news outlets are going to be so quick to say like, oh, it's because of this or it's because of that, and then like they look for the nearest event that happened and try to put those two things together. Obviously, I don't think that happens all the time. I think for the most part, yeah, there is some kind of correlation with news events and things like that, but I think it happens far less than we think. And I think stock market media is just trying to drive as much traffic to their sites as possible.
Yeah, I agree with that. But I finally found, the question too. Jamie was asking, for anyone investing, do you avoid or favor when a company releases this earnings report? So you just told them like, hey. So Alex's answer is basically he avoids, those kind of events, and that's a good question. That was a great question. Also, your answer was that these news medias, like for example, like last week, we had a pullback because the president said, that he might be willing to actually prolong the China trade deal till after the election, so that dipped. The stock market dropped like, I think, a few percent. That had a dip. So these articles, I started getting on CNBC, the articles being written that these huge hedge funds that they're hedging their $3 billion portfolio with, they're buying puts on the stock market worth like $32 million, looking for like 5 or 10% correction. Like I started getting all of these, negative recession kind of feeling, like these big banks are doing this kind of stuff. So yeah, they push, like that kind of stuff gets pushed around and the narrative changes like super quick. When you're like an all-time high, you're like, oh my God, is it time to buy? Did you invest? If you bought like $1,000 worth of like UPS, this is how much you would have made. Like all the narrative changes like so quick,
Absolutely.
So you can't trust it, Yeah.
That's a perfect example too, like with Donald Trump. Like, think about all the times, and like he's always doing some crazy stuff. And I'm not the biggest fan of the guy. I don't want to talk too much into politics, but he's always doing some crazy stuff. Think about all the times that he does something and nothing happens with the stock market. Like it could go flat. And I don't really believe that like, oh, the market thought that this event was more significant than this event, and that's why the market did this instead of this. Like that just feels kind of weird. Honestly, the stock market has millions of transactions every hour. Billions of dollars are being bought and sold. Obviously, there's going to be fluctuations in both directions. It's just, a 1% day up or down doesn't have to be driven by this event that just so happened to happen right then and there. That is just kind of ridiculous sometimes.
Yeah, I agree. It's all about like supply and demand and what people think of what's going to be the future outlook, like investors and things like that. So so we got a Sweeper Thief Fox 14. Thank you for joining the live stream. We appreciate it. So Dave was asking 90% return over what time frame? So Dave was asking you what time frame?
That's year to date.
Year to date, yeah, dude, that was solid, man. Especially with stream trading, bro. You buying like stocks, So that's crazy, bro. Good job, man. Shout out. Let's clap for Alex.
Oh, thank you, man.
So Lydia was asking, what degree did you get? That was a great question because we just had a conversation about how, what did he study in school and his job and that kind of stuff. But yeah, tell us.
Yeah, absolutely. So I got a degree in computer science. And the reason why I went that route is because when I was around maybe 8th grade, I took a computer science elective. And my teacher asked me, it was kind of weird for a computer science class, but basically my teacher asked me like, hey, what do you guys want to do for the rest of your lives? And so did some research. Literally the only things I searched was like, what are the careers that pay the most money or is easy to get a job in? And computer science was always at the top of the list. I looked at the salaries like, oh, we're talking like 70K, 80K, 90K, all that stuff. So like, 13-year-old me was obviously like really inspired by that. So I ended up pursuing that, mostly just because of the career prospects, to be honest, which I don't think is selfish at all. But yeah, so computer science. And then I ended up getting a job a little bit before I graduated. I don't have a job right now, but I did get a job right before I graduated. And yeah, it paid really well. So I was really happy with it.
Cool. Awesome, man. So we got a Biggie Bull Investor Channel. And thank you. Sorry I didn't get to see like your comment right away, but thanks for joining the live stream, man. We really appreciate it. And also there is a question, I think. Yeah, I forgot, but yeah, definitely. JM is saying I'm no longer near to place to do put, swing trade, day trading, etc. But thank you, JM Dividend Investing. Thank you for joining the live stream. We appreciate that. And make sure you like the live stream too. And let me drop, Alex's YouTube channel on the comments. And if you don't have him, go and subscribe to his channel. I should have posted it earlier. I posted earlier on, and also it's in the description box below. And also here's a channel to his YouTube, so you guys can go and check him out. And he talks about the technical analysis, the stocks that he's buying. He also have M1 Finance.
He froze.
Yeah.
Finance portfolio.
Yeah.
You froze for a second, Daniel.
Okay, yeah. So can you tell us about your portfolio name of M1 Finance?
Oh yeah. So I have 3 accounts. They're all animals or creatures that have a horn on their head. My main M1 Finance portfolio is called Unicorn. I have one. Actually, I killed this one because I quit my job, so I ended up needing some cash. But the other one's called Rhino, so I had to kill Rhino, unfortunately. And then this other one is called Narwhal. A narwhal is a whale with the horn in its head too. And that's basically where I do all my like really experimental stuff. I buy MJ stocks. I know I'm not allowed to say the actual MJ word, but yeah, I buy MJ stocks and gold miners. So yeah.
Cool. Yeah, the drag. So you killed. Oh, so you killed one of them. Okay, cool.
Yeah.
But so your M1 Finance is just like for long term. You don't touch them, right? You're just like that's 100% just to hold them.
Yeah, exactly. And like, I hope I don't have to touch it, honestly. So I started taking classes since I quit my job just to like invest in myself and, learn things that I'm actually interested in that I also think would be valuable. And the more I start taking these classes, the more I'm like, man, this other class would be really cool too. Like I'd be such a well-rounded, person. But so I'm still like debating of whether I should kill one of my M1 Finance portfolios. And I'm like, I don't know, because it's starting to mean a lot to me. So, if I can help it, I won't sell it completely. But like the thing with M1 Finance is like once you sell or like take money out on the long-term graph, you'll see a drop. And like that drop just annoys the heck out of me. So like if I had to take any money out, I'm probably just going to destroy the entire account. So yeah, I'm still thinking about it. So I'm thinking of getting a part-time job just so like I don't have to ruin my investment portfolios,
Cool.
Like tell Daniel, Robinhood is where I play, and M1 Finance is where I save. That's what I tell Daniel. So
nice. Yeah, definitely, man. So Marie is asking you, Alex, what are you doing while between gigs? So
absolutely good question. Yeah. So I ended up quitting because of some things I didn't like about the company, but I won't focus on that. I'll focus on the stuff that I saw outside the company. So a couple of side projects. Basically, one of them is doing pretty okay. It's not like huge or anything, but it's I've co-founded the most popular fantasy basketball Chrome extension, which is pretty cool with one of my friends. So I'm working on that. And then the other thing was I wanted to learn more courses that made me a better data scientist, because that's basically the career that I want to go into. So yeah, basically, and you have to keep a schedule when you're unemployed, because like, man, it is so easy to waste like 3 hours on YouTube and just like wonder where the time it went. And then like if it's 11 p.m., you're like, well, it's too late to do anything else. I might as well go to sleep. So my schedule lately has been like 3 hours to my side projects, and then 3 hours to one of my courses, and then 3 hours to another course, Monday through Friday. So yeah, keeping myself motivated.
Oh, cool. Awesome. Awesome. Yeah, always stay motivated. So we got Nick, investing engineer. Hey, guys, welcome to the live stream. I appreciate it. Thanks for joining the live stream. We were talking with Alex. If you don't have his YouTube channel, go check him out. He's an investor, a long-time investor. He does swing trades, and he has a long-term portfolio and all that. So I wanted to ask you, like, why did you call your YouTube channel like Bloodphantom81? And your channel is like with finance. Can you tell us about why the reason that is?
Yeah, sure. So I actually hesitated with revealing the secret because Gen X dividend investor doesn't want to share his name. And I don't know what to call him besides Gen X dividend investor. I don't like calling him that. So I don't know. I'm still debating on whether I should share it. But because it's your guys' live stream, because you guys are my favorite streamers,
Appreciate it.
I'll go ahead and reveal it. So yeah, Bloodphantom81. That's basically my first name is Blood. No, I'm kidding. Bloodphantom81. So yeah, it's three parts, right? There's blood, right? I don't know if it's going to get demonetized if I say some of these words, but basically,
no, it's all right, dude. Like, we don't care.
Right. So yeah, so growing up in Southern California, Los Angeles, being Hispanic, I think there's like it's easy to kind of admire certain cultures. In this case, it was gang culture. I was never in a gang myself, but I knew people that were, and like some of my best friends growing up ended up going in gangs. And in Los Angeles, there's like two really, really big popular gangs. There's Bloods and the Crips. And so I made this YouTube name when I was, I think 16. I've had this YouTube channel for a long time. It wasn't always about investing, but when I started, I think, yeah, so Blood is basically one of my favorite gangs growing up, which is weird to say is my favorite gang, but like as a kid, you don't really know any better, Because like, yeah, being in the gang meant power, and it meant the ability to make an impact. And I think a lot of kids really yearned for making an impact. Obviously it was a negative impact, but like at least it would give people the feeling like they mattered. As destructive as that sounds, I think that's why the appeal of gangs was so popular. Also, like no one would mess with you if you were in a gang. But anyway, so that's enough about that. That's Blood. Phantom. So basically, one of my favorite rappers growing up. His name is The Game. And on one of his songs, he mentions the word blood phantom, and it's a phantom is a type of Rolls Royce. And so, yeah, that's basically where phantom comes from. And then 81. So basically that's the jersey number of one of my favorite NFL players growing up. His name was Terrell Owens. And so, yeah, you put all that together and it's Bloodphantom81.
Dude, I remember Terry Owens. I think he became bankrupt, right? I think something like that.
No, I wouldn't doubt it, to be honest. He had a pretty.
Dude, he was on MTV, The Challenge or something, and then dude, I remember that guy. I just remembered.
Yeah, well, he did a whole bunch of reality stuff after the NFL. So, like, honestly, I wouldn't doubt it if he was like selling out to try to make an extra buck. So,
dude. Yeah, it was on a TV show talking about like how he was. I think it was like even on CNBC or something, talking about like how he lost all his his money and things like that. Terry Owens, yeah, I know him, dude.
Okay,
he was on The Challenge, yeah, dude. Yeah, but anyway, yeah. So Lydia said I thought that was his name, Alex. Yeah, Alex is his name. Yeah, Alex is his name. Yes, The Game is a legend. Yeah, The Game is awesome, man. I like the rap that he did with Lil Wayne, talking about dying or something at the cemetery. You probably know it, right?
Maybe he's had a couple songs with Lil Wayne. There's one, it's called Bloods versus Martians. Oh wait, no, that's with Tyler Creator. Anyway, you're gonna say Jose?
I don't know if The Game is a legend. I know Lil Wayne is, but I don't know about The Game is a legend yet. So,
yeah. But anyway, yeah. So let's talk about, so that's like your thank you for breaking down, your name of YouTube channel. So what inspired you to start your YouTube channel? Can you share us about that?
Yeah, good question. So like I said, I think I started this channel when I was about like 16. So that's like 8 years ago. And I started it because I was posting videos of my cousin and I in our band. I was in a lot of bands growing up. But then like I've since like removed most of them. And then like the other thing I did with my YouTube channel was I started to take popular videos from Facebook and be like, how many views can I possibly get if I re-uploaded them? So just like random stuff, right? Stuff that doesn't really matter. And then when I started with this YouTube channel, honestly, maybe I was just bored. But I think one of my motivations was like, hey, technical analysis is something that you can use to like make money. Like that's it. And like, here's living proof of me making predictions, increasing my account value, actually making money. So that was like my primary motivation of when I got into the financial thing, which was a couple years ago, I think, was when I started uploading finance videos. So yeah.
Cool. So, what music instrument do you play? Play guitar, like piano or saxophone, like Jose? You blow the flute, like the violin?
Yeah. I played everything.
All right.
Yeah, I played because I would just like make my own music because I never like covering music. I always looked down on people that made covers, like especially in high school when there'd be like these kids with like long hair. They would just bring their guitars to like the lunch table and just start playing like covers. I'd be like, man, that guy's whack. So I never liked covers, but yeah, so I started making my own music, and because you're making your own music, you have to do everything. So like I played guitar, I played keyboard, I played drums, like I sang too. So yeah, just everything.
Nice, dude. That's awesome, man. I know Jose plays the guitar. He used to be in a band. Man, that's yeah.
One man band.
Oh, there you go.
There you go. Yeah.
Yeah. So what's like your goal for your channel now? It's all about finance and you're documenting your journey. Like, are you interested in giving advice to people? I know you made some pretty good call outs, especially like even last week when the market dipped, you made a video about how are you reloading it, like you buying it, you talking about, when are you going to, buy stocks, or when are you going to sell, or your top 3 pick stocks that you're investing and things like that. So is that the continuation for the future for your channel, talking about finance, giving advice and all that, or what's like the future? What's the goal of it now?
Absolutely. So I think a small part of it, I'm still figuring it out, but I think I've been around this financial YouTuber community long enough to know like content creators that I really enjoy and content creators that I don't really like too much, but I mean, not any of us, of course, but of the content creators that I really like, I noticed there's a few things that makes me like them a lot. Number one, if they're informative, meaning I learned something from them. Like PPC Ian, for example, just a wealth of knowledge, every single video, just very extensive. I love that guy. I hope I can meet him someday. Actually, I'm still I'm on his like meetup list, but anyway. And then informative, right? So the other thing is challenging. So like I want something that'll make me learn something, and that might even be difficult to learn because like learning new things I think is really fun. So I like YouTube channels that are challenging. The other thing is I like YouTube channels with warm hosts or warm content creators. So like I have to feel like I can potentially hang out with this person in real life. Like if I feel like I can't hang out with you in real life, I probably wouldn't like your channel, to be honest. So given all that, I think what I want this channel to be is basically, something that challenges people's perception on trading. I think there's a lot of things that I don't like about the investing community in general. Like if you go on Reddit, for example, like reddit.com/r/investing, everything they say about investing is like, there's no way you can beat the market. So what you have to do is just invest in index funds. And then, when you're 60 or 65, then you can retire with like $1 million in your nest egg and things like that. And it's like this such a defeatist attitude, right? It's like the market is so hard to beat. Even all these professionals can't do it. That's why you shouldn't do it either. And that's why you should pick safe stocks or just do index investing. So that's kind of the perception that I'm trying to change with my channel is like, you only get one life, and like when I hear people say, hey, if you invest this amount of money for this much time, then you can retire at 55, 60. I'm just like, dude, like, I don't want to think about my life when I'm 55 and 60, like I want to live now. So I'm basically documenting my journey of like accelerating my wealth, year after year, extremely quickly. I think I should have a pretty big nest egg in like 8 years, for example. So I'm just showing people that world of it. It's just like, hey, you can take control of your finances and you can swing trade in a smart and not a reckless way. You know what I mean? So yeah.
Awesome. Yeah. Looking forward to it, man. We subscribe to your channel. Shout out to Jose that, that recommended your channel. We were in the live stream, we were talking about Tesla, and then he mentioned your portfolio name, and I got interested because I'm always interested about knowing people that invest in, in Tesla and things like that. So yeah, man, it'll be awesome to see how you're going to continue, your journey, like within 8 years, like even with like a year, the thing that you achieved was like insane. So within 2 years, 3 years, 4 years swing trading, yeah, your portfolio could definitely, you know, get to another level, you know. So
yeah, I think earlier this year, like I think no, late last year is when I set my goal. Like for 2019, I'm gonna have $100,000 account. And then I started adding a little bit of money every month. But then like around, let's say September, I think I was already at like 90,000. So I was like, okay, I'm easily going to get this. So then I made it harder for myself. So I was like, okay, no more money into the account. And then I ended up getting it. And like, even right now I have, and like, oh yeah. So around the time I got it, I was like, okay, my goal from next year, 2020 is 200,000. And if I look at my account right now, I'm already at 115 and like 115,000, and 2019 isn't even over yet. So yeah, I'm like, everything's happening so fast, to be honest. So yeah, I'm really excited about it too.
awesome. Yeah, it's compounding too. You know, you're making some gains. You know, you also got some dividends like on your portfolio, right? Like I'm gonna ask you questions about that. But
Yep.
thank you, dividends with Alistair for joining the live stream. It's not too late, man. We're talking. If you don't have, you know, a Blood Phantom YouTube channel, go check him out. I'm gonna drop his channel link over here and in the comment section. You know.
Yeah, truly a blessing, man. You know,
Yeah, absolutely.
So happy for you. There's going to be days that the value is going to go down because you have such a massive amount. You know, it's going to be down $3,000-$4,000 easily. You know what I'm saying? Yeah. But the good days are really good. So.
Yeah, absolutely, man. Been there, done that. And like, you're completely right. Like the amount that my account fluctuates at this point, like it just feels like numbers on a screen. You know, like for the last couple of weeks, I think I made like 10 grand or something. And like when I wake up every morning, I see my account, it's like it's up 3,000 or 2,500 or 4,000. Like on Friday it was up 4,000, and it's just like it doesn't really mean anything, which is kind of bizarre, you know, because a year ago I'd be like, wow, this is so crazy, you know. But yeah,
that's just like 2-3%, you know.
Yeah, exactly.
So Dave was asking you, how much of the 115 does he put at risk in swing trade? Multiple positions or a lot in one position? Scaling a large account becomes hard after a while. So yeah, so how much are you risking, you know, in swing trade?
Yeah, good question. So just to be clear, the 115 is just Robinhood. I have another 20 in M1 Finance. So the 20 M1 Finance I'm never touching. That's for long-term investing. And then the 115 in Robinhood. So I try to be kind of strategic about it. My third, fourth, and fifth largest holdings are all either dividend. Yeah, they're all dividend paying stocks that I consider really conservative. So similar to a bond, but just something that pays really well monthly. So I think my third largest holding is SPHD. I have about $17,000 in them. It gives me like $60 a month, which is great. Some days I'll pull that $60 and put it into my bank account because like I don't have a job right now, right? So like I need it sometimes. But yeah, so the reason why I have my third, fourth, and fifth largest holdings in like blue chip dividend paying stocks is because I like to hedge myself. Because if the NASDAQ drops like 4%, which is a lot, by the way, then the SPHD might only drop like 0.5% or 0.8%. So at that moment, I can, if I need it, I can just move my money from more conservative to more aggressive ETFs and stuff like that. But as far as my breakdown goes, I'd say I always hold around 30 to 35% of my money in those blue chip high dividend paying stocks. So SPHD, I have LTC, I have 3M. I love 3M. 3M is awesome right now, like such a great value. I think it's gonna explode. I think I have like 6,700 in 3M. And yeah, so 30 to 35% of my money is in high dividend monthly paying stocks. Another 15% of my money is in I would say like more speculative tech stocks, like Nvidia, for example, PayPal, Square. Actually, more than 15%, more like 25%. So overall, we're like 55% there. And then the other 55% is the money that I use to go a lot more leveraged, I would say. So yeah, you know, entire spectrum of most conservative to most aggressive.
Cool. So your Robinhood is like more so, just like Jose is like aggressive, right? You're trying to grow it, swing trading it, things like that, right?
Yeah, exactly.
So what's like on your portfolio? What are you holding the lots right now on the Robinhood account? You know, that you like trading, you know, swing trading.
Yeah, sure. So one thing I want to make clear though is I use Robinhood Gold to increase my leverage. So the $115,000 is mine, right?
Yeah.
But I actually use more money than I have. And the reason why I do that is because I think leveraged, when used properly, can take you places where you didn't think you could go, right? Because at the end of the day, we're just one person. I think leverage is just so important to make your money larger, right? So the numbers that I'm giving might be a little off. So honestly, I'm not completely sure of the position sizings. But yeah, I buy NASDAQ ETFs or tech ETFs and NASDAQ options as like my main swing trading lots. So I'm very bullish on the stock market over the next 6 months to a year. So that's what I'm holding right now, holding NASDAQ ETFs and tech ETFs.
Cool. So how did you get involved in like leveraging though? How did you discover it? Because people will say like a margin, using margin accounts kind of like dangerous.
Yep.
Like, yeah, how did you kind of, grew to using it? Because it's kind of have to get an experience because, it's kind of risky when you actually, borrowing. It's kind of like, broker offering you money, for people that don't know what margin is. But I'm sure a lot of people know what it is. But how did you get to that level of confidence to be like, hey, you know what, I'm going to use another, I'm going to need more, so.
Yeah, absolutely. So I had to get to a point where I trusted myself to borrow money, right? Because as much as I borrow money right now, I'm still not like super crazy with it. Like I'm still kind of conservative. And like when you have a 6-figure account, you can borrow a lot of money. Like you can borrow $60,000 if you want. Just like Robinhood makes that possible. I did have to get to a level of confidence, but the thing I realized too is like anyone that's become extremely wealthy has done so by being leveraged to some degree, right? Like at the end of the day, we're just one person. So if you want to make yourself seem more than you are and make yourself valuable and more powerful, you're going to have to leverage. You're going to have to leverage. Well, there's different options you can do. You can leverage time. You can, hire employees to do things for you that you don't necessarily want to do. You can leverage resources or brain power. You can hire people that are smarter than you in certain areas to solve the problems that you yourself can't answer. You can leverage money. The majority, real estate is not possible without leveraging your money. People take debt. It's good debt, but they take on debt. And the reason why real estate makes money is because you're getting like, a really okay percent return, let's say 6% return, but on an amount that you leverage. You can leverage yourself up to 5 or 6 times, right? The stock market is definitely seen more of a gamble than real estate, so it's not encouraged to leverage yourself. But yeah, when I leverage myself or just whenever I trade, I always have an exit plan. So I know at what point that I'm wrong. You know what I mean? So like I'll go into the stock and it's like, okay, I think the stock's gonna go up 10%, but I know that if this stock drops below this level, that I'm probably wrong. So I always have an extra exit strategy. I always have my stop losses and things like that. But yeah, I was becoming profitable, but I just felt like I wasn't making enough money. And that's when I leveraged myself. And that's when I started borrowing money from Robinhood. And now I can do that. Now I can buy ETFs, whereas like, the S&P 500 or the NASDAQ generally don't move too much on a day-to-day basis, right? Because they are market ETFs. But if you leverage yourself, then you can like, make twice what you thought you could. On top of that, if you, play a little bit with options and things like that, boom, you can leverage yourself a little bit more than you thought you could. I know that everything I'm saying right now probably sounds like it's a car accident waiting to happen because like I'm talking about leverage and options and things like that. I think there's a lot of people that if they're hearing this, they'd probably be like, you're at risk of blowing up your account. To that, I would say like, I'm doing everything I can to make sure that I don't. Like I've thought about all the exit strategies. I have a plan in place for that. And I'm welcoming the next bear market. I'm welcoming the next recession because that's really what's going to set me up for the future.
Yeah, cool. It's always has to be like there's a term that people say, even like on hedge funds and things like that. The managers say that you have to earn the right, to leverage, based on your performance and your past and your experience, and it's like a level up. When you actually get to another level of like when you're super profitable and you're solid and you're confident, then you earn the right, to get extra money from outside, to make an extra insane amount of return. But if you're just using your own capital, it's not gonna, as you said, it's not enough, to make that, Also, like leverages, if you know how to use it, like Grant Cardone, he's in a lot of debt, like with real estate, everybody's in debt, like they use a lot of leverage, to invest in things like that. So if you know what you're doing, if you have that confidence and you have, the experience, and you can definitely back up if you hedge yourself, if you have an exit strategy, which is super important, in case something goes south, then, then you have the right, basically you have the confidence to go for it and use it, so how did you discover all that though? Like leveraging and things like that.
There's a really nice app called Robinhood.
Wall Street bets? You like Wall Street bets, man? No, I'm just joking.
Get me started on that. That is my daily source of entertainment. I love Wall Street bets. Dude, honestly, this is gonna sound kind of backwards, and I'm not even trying to be funny, but some of the smartest comments I've read out of all of the investing communities have been on Wall Street bets. Like, it's full of people that, okay, maybe there's a lot of dumb people that don't know what they're doing, right? The other half is like really smart people that just don't care. And they're just like, yeah, I have some play money. Let's just see what happens, right? And that's why I love that community so much, is because the people out there, I think, are smarter than investing and, the stock market one. Just because like the stock market one, investing one, they're just so conservative. It's like, what's the point of anything? Let's just give up and index invest. But as far as like your first question, like how to get into leverage. So Robinhood made it so easy. Like when it first came out, it was like you swipe this way and it's like the shiny thing. It's like Robinhood Gold. You can increase your buying power by 2x. I was like, man, this is just what I needed, Yeah, that's pretty much how it happened.
Cool. Robinhood, man. Robinhood. Speaking of like Wall Street bets, that's how they discovered the Robinhood glitch, infinite money. Like, there's smart people out there, man. They make call outs, but it's kind of funny at the same time that they're like super smart too. Sometimes they get lucky, but it's just, that's just how it goes. But hey, man, they're smart enough to actually find a loophole and exploit it and get up to like $1 million of leverage. That's insane, And they also found another lever, like a loophole too. Like I think it was like a few days ago, about doing iron condors and things like that, and it was quite interesting, man. But anyway, Lydia is asking you a question. What has been your biggest loss? That's a good question. Because you learned a lot from your losses, also from your gains. But the losses, they stick to your head. So that's a great question, Lydia. Shout out to Lydia, man. Lydia Santiago. Okay, Alex.
Yeah, I love Lydia. Yeah. So I think before I answer that question, I will say losing money hurts more than making money feels good. You know what I mean? Like, the amount of emotion that you feel from losing $20 does not equal the amount of emotion of winning $20. If anything, you have to like increase the winning side to like 100. So like it feels the same to win $100 as bad as it feels to lose $20. You know what I mean? So yeah, the losses stick with me a lot more. When I was in college, like I said, I used to wake up and just like want to vomit because of how much I blew up my account. I think when I had a really like small account, let's say like between the $1,000 to $5,000 range in college, I think I lost like $3,000 of that in like a day, which is probably one of the worst losses. And then the reason why it sticks with me more was because like it was when I first started trading and like I didn't have that much money, so it was just like a really huge deal. So yeah, I think I lost like $3,000 on that day. And then the worst loss now, like since I became more mature as a trader, was on October 2018, I would say. Yeah, October 2018. I was actually at work, dude. It was such a crazy story. I was at work and I got into a meeting and my account was like flat for the day, right? By the time I left the meeting, like 40 minutes later, I think I was down like a good like 4,500 or something. And it was just like insane. I think the market just started unraveling and I wasn't there to catch it. So yeah, in the matter of an hour, I think I lost like $4,500 and like, yeah, definitely the worst loss.
Dude, yeah, it was not bad, man. With your portfolio stuff, yeah, at the beginning, yeah, it's definitely, it's it's kind of tough, especially when you lose $3,000 out of like a $5,000 account. Like that's a huge percentage, Yep. There's like a recovery ladder that people say, once you dip down like below 50%, now you have to make 100% of the 50% money that you've made, that you have left, to get back to where you're from, So the recovery ladder is going to be super extra hard for you to get to just break even.
Yep.
So that's to the point where people like started YOLOing, started like buying. Okay, let me get back there. This was like it expedites, your path to blowing up your account. So
that's a good way to put it.
Yeah, so
Yeah.
that's the way. Yeah, but only $4,500. That's really, really, not that bad when you look at it.
Well,
Yeah.
that was in that hour, but like in October 2018, for that week, I think I lost like 12,000 or something. And this is probably when my account was like at 60,000 or something. But like, the awesome thing is that I actually learned something from that. Like I didn't just give up or be like, yeah, my system's always going to be right. Like I told myself, okay, what do I need to do to make sure this doesn't happen again? And I thought about that, and I added something. I started watching more YouTube videos, and I added something to my arsenal after that moment, which is called trend following. And trend following is something I have in my arsenal now, which is just like, if the trend changes, like get out. Like don't hold something if the trend is going against you. So I added that to my arsenal, and like I think I'm a better trader because of that day. So yeah, it's always a learning process. I'm sure like I'm gonna get hit pretty hard at some point again, and I'm gonna have to learn something new. But it's a progression.
Yeah, cool. Yeah, definitely, man. You just have to learn from it. You just have what's like the main thing that you learned in taking those losses, that you actually kind of maybe taking sized up on this position a lot, or do I have to kind of find a strategy that I can hedge? Because I know you mentioned that you have another account that's strictly just like for hedging. Did you learn something? What's like the main thing that you learned out of your losses? The important thing that you learned.
Yeah, absolutely. So I think with position sizing, yeah, it's going to sound kind of arrogant, but I think when I'm strong in my convictions, I'll always go for big position sizes. The only times I will not go for big position sizes is if like I'm kind of unsure about something. But like, yeah, for the most part, I'm just like, I'm liking this, let's do it. So I always go big, like go big or go home, honestly. It's just like in basketball, like if you're open, like you got to take that shot. If you don't take the shot when you're open, then you're risking a really good opportunity. So if I see an opening, I'm gonna go for it, right? So in terms of my position sizes, I always do the same thing because I trust myself and I trust my system. And then as far as the other thing is like how to avoid losing money, because losing money is the easiest. If you can't avoid losing money, that's the easiest way to stunt your growth. So yeah, and I touched up on that a little bit, but trend following is probably something I really picked up, which I can explain for a bit. So trend following is basically when you decide if something's in an uptrend or a downtrend or a trendless. And you can use moving averages to determine if a trend is up or down. A moving average is basically a line that follows the price, which is either the slope is either up or the slope is down. So just using moving averages, you can tell if a stock is in an uptrend or downtrend. And basically, I don't hold stocks if they're not in an uptrend anymore, because as soon as that trend changes, you don't know how nasty it could get. And in the past, I've always had this idea, but like in the past, sometimes I don't listen to my system, and I'm like, you know what? No, I'm smarter than my system. Like, I know what's gonna happen next. And like in October 2018, that's exactly why I got caught, because like the market dropped for a day, and I was like, no, it's probably gonna turn around. Like I know what I'm doing, and it dropped like the next 2 days, like 2% every day, 2% every day, and that's when I lost like a lot of money, probably like $6,000 in that week, just because of my overconfidence. So. Yeah, I think trend following is one of my biggest, one of the biggest things I learned.
Awesome. Yeah, and the trend following is really fantastic, especially like if you're like in the bull market right now that we're in for the past like what 6-8 years, since the recession. Like that was like a long time ago. The recession was like 2008, right? That's like 10 years. No, that's not even 10 years, like 12 years. So like we bounced back super very well. If you were actually a trend trader, yeah, that was solid.
Market crash coming very soon, bro. Very soon.
Yeah, maybe we'll see. Yeah,
every time it's coming. Like when you look at the news, it's coming. It's around the corner.
Shut up, man.
And it has to happen because it has happened the last 3 times the yield curve inverted. So it has to happen within the next 12 to 18 months. So I'm gonna pile up my cash on the cash management, and then to go down 40% and then drop it all in there.
That's awesome, dude. Yep.
Yeah. So let's welcome Cecilia Baker. Thanks for joining the live stream.
Oh, I love Cecilia Baker. She's great.
Yeah, thank you for joining the live stream. We appreciate that. And yeah, you probably have, we have like 21 people watching. So if you guys don't have, Hidden Freedom Invest, I mean, what am I saying? What's that? Bloodphantom81 YouTube channel. Go check out his YouTube channel. I'm gonna drop the link in his comment section, in the comments. Go check him out, and follow his approach. He does string trading. He does call outs too, and his strategies and things like that. So go subscribe to his channel. So let me talk about what do you do when you're actually making a lot of profits, like as you are currently doing? Do you take profits? Do you take profits home? Do you kind of keep adding into it? You reinvest the profits that you have? Do you lock in them gains? Like, how do you do all of that? When you're making exactly. a lot of money,
Yeah, I mean, I try to always be in stocks as long as we're in an uptrend. I hate being in cash. I hate having cash that's sitting on the sidelines, unless I don't think it's a good time to invest. So yeah, and as far as like profits go, I try to never take money out of my Robinhood account unless it's from like a dividend. Unless like something comes up, I have to take like $100 out or something. It's like, it is what it is. I have to do it. Don't have a job right now, so I have to do that like a little bit more often lately. But yeah, the thought of taking money out of my Robinhood account and putting it into my bank account like kind of stings a little bit. Like it hurts me to do that. So I try not to do that. So I never take profits home. All the profits that I get, I reinvest back into the same strategies that I have. Now it's at $115,000. So like if I make another 20%, like you can imagine how much profit that is. I take that out. If I make another 20%, you can imagine how much profit that is. So yeah, it's just a matter of compounding.
Awesome. Just compounding, definitely. Yeah, especially if you're making profits and your strategy is working and you're in the bull trend, you're following your trend. Yeah, the compounding effect can really take over. So Cecilia Baker is asking, glad to be here. Can you talk about using leverage and how and when you pay it back? That's a great question because I never know how that works. Yeah.
Yeah, good question. So I'll answer the second question first, which is how you pay it back. And first of all, like, try not to use leverage. That's my first disclaimer. As far as how you pay it back, so Robinhood will charge you on a daily basis, depending on how much money you're borrowing. And I think their fee right now is maybe like 3 to 4% or something like that. So on a daily basis, they take whatever you're borrowing, and then they do the 3% over the course of a year and divide it by the amount of days in that year. And so you pay a little bit of a fee every day. So that's the other reason why I don't like to be in stocks if I don't really think there's a trend there, because like I'm paying to borrow money pretty much. And as far as like when to use leverage, so I think there's a really awesome peer-reviewed paper which is talking about trend following systems. And the great thing about trend following is like if we're in a recession, obviously that's a downtrend and you don't want to be in stocks at the moment. But if the trend is up, you want to stay in stocks, right? That system kind of works normally, but with leverage, it really works. And this is like data over the past, 65 years. If you're in a bull market, I think it's okay to be leveraged, and otherwise it's not. So yeah, I think it's just a matter of, based on your risk tolerance, determining what a trend means to you. You know what I mean? Because like there's a daily trend, which is like some time scale, but like on the hourly time frame, that's also a different trend. On the weekly time frame, that's a different trend. So you can build your own system. Sometimes you don't even have to think about it. You can build your own system just following these simple rules. Like if price action goes here, I buy. If price action drops below this, I sell. And I just, keep recycling that. So yeah, it's just a matter of determining what a trend means to you.
Yeah.
Cool.
Right.
So
real quick, Daniel, they're making fun of us in the live stream because we answering fluffy questions and answering the real hard-hitting questions like the one that Ryan asked over here. I put it up on the live stream. It says, what does Alex see in the crypto market?
Okay. All right. Cool. And by the way, feel free to throw the non-fluffy questions too. I'm ready for them. Yeah. So Ryan asked what I think about the crypto market. Yeah. So I think the crypto market is setting up for another bull run. I think the drop that we had in Bitcoin, for example, where it dropped from about 22,000 to about, I think it was 3.5K. I think 3.5K is a short-term bottom. I think we're still in pullback mode in the short term, though. I think we might get another drop, but I don't think it's going to break the 3.5K mark. I think there's pretty strong support there. It's just a matter of when this market's going to take off. And once it breaks out above the recent high that we made, which was, I think, around 11,000, in my opinion, we're going to see another meteoric rise in Bitcoin. So I'm pretty bullish on Bitcoin in not the short term, but the medium term and the long term.
Nice. Yeah, interesting. Yeah, like Ryan is saying that Bitcoin is going to get to 100K. I actually saw an article, that from somebody. You're just the trader guy says that that might happen. So Ryan, you might be onto something, man.
Where's Bitcoin at right now?
I think it's like $7,000 or $8,000.
Around that range.
Yeah,
I'll buy it around 3. That's what Dave is saying.
yeah. So Dave, David's asking, what do you think about Tesla? And also, I want to clarify that Alex actually likes the Cybertruck.
I do.
He likes it, man.
I saw like a different rendition of the Cybertruck, which had like a couple rails in the beginning, and so it made it look like a war truck, and it just was so cool. And it was like all black. I was like, man, this is so cool. Yeah, I'm a big fan of the truck. I'm not a big fan of the stock though, which is interesting, right? Because like people, I mean, one thing about me is like I don't usually associate a stock with a company, so I could think something's a good or bad company, but I could like trading them or investing in them, which sounds completely backwards. But I think stocks go up or down based on people's belief in that company, not so much of how good the company is. Because like we invest in companies because we think that they're going to be worth more so that we can make money. We don't invest in companies because the companies are good companies. Does that make sense? Like we all want to make money. So I think that's going to influence the way people actually invest or don't invest in a certain company. With Tesla, I haven't looked at it in a while. I think I just swing trade it every once in a while. I think I've done it twice in my life. I've done okay on both trades. With Tesla, I don't see it doesn't fit the criteria of the type of stocks that I invest in, especially for the long term. So I'm not saying it's a bad stock. I'm not saying it's a bad company. It doesn't fit my system though. I like something that has a really clear trend, and Tesla just kind of does all sorts of stuff, all sorts of gymnastics. It looks like the play place of a McDonald's, just like slides going everywhere. Like you don't know what's going on here. So yeah, that's why I don't like it.
Yeah, I agree with that, man. Tesla stock is, it's very volatile. All it needs is just like a few, headlines, like, hey, something came out, somebody sued Tesla, or they're gonna open like a gigafactory or something, and the stock goes up, and they get sued, it goes down. It just goes up and down a lot, So yeah.
It's good to swing trade it for a couple months, buy low like around 200, 220 or something, sell it, when it reaches 300, 340, whatever.
Yep.
Buy it again at 180, sell it around 340. It's gonna go back down. Just a matter of time. So
yeah. So let me ask you, how long do you hold your swing trades? Like for a month, 2 weeks? Like what's like your shortest swing trades? Or like how far off are you going to hold them?
Yeah, that's a good question. If it's options, I try not to hold them too much. Even though I only buy options that expire at least 3 months out, I never hold them for more than like a month, for example. I never hold them more for like than 3 weeks. So options I'll do for like anywhere from 2 days to 2 weeks, depending on how much I'm profiting. Everything else, I usually swing trade on an average for like 2 weeks to 5 weeks, I would say. But like, I really try to get into those trades where I don't actually have to sell it for like another year if I don't have to. Because as much as I trade, I don't like trading. Like, I don't like the thought of having to sell if I think it's too high or buy if, whatever, right? So I try to get into those nice, cushy trades. I can feel good about it. Obviously, I'm always going to tinker with it because like I don't have that much patience. But yeah, so for most swing trades, anywhere from 3 weeks to 2 to 6 weeks, actually.
Nice. So you also have, what's like the average range that you look at for the stock to move? Like, for example, you buy a stock, or you have like expectations, like the stock moves 10%, 5% in your favor, then you already have like everything set up, right? This is where I'm going to take my profit. If it goes down, if it gaps down or gaps up, I'm going to sell it. Do you have all of these things lined up before you place that trade?
Yeah. And it's definitely an art and not a science. Like I don't have a list of rules in my head that I follow.
Yeah.
I generally don't look at like how much I'm up on that company, because just because I'm up 100% on the company doesn't mean like, oh, it's getting too high, I should sell. Like the company could keep on climbing up, right? That just means I got it at a good price. So I never sell a company based on how much I'm up. I only sell a company based on how far I think it's gone, but it has nothing to do with my position, So yeah, if I think a company's gone up too far too soon, then yeah, I won't feel comfortable holding it too much. And the same goes for anything I buy, whether it's a market ETF or Bitcoin or any kind of company. So yeah, I do my best to define my criteria, but it's definitely a very gray area.
Or like, are almost the majority of your swing trades is only based off of technical analysis? Like
Yeah.
the majority of them? Okay.
Yeah, and like, I mean, I try, if I can, I'll probably swing trade something that like is a little bit more fundamentally sound. For example, on my recent videos, I recommended, or I was saying that I was buying Starbucks and McDonald's, which is true. But the great thing about buying blue chips, even if you're swing trading them, is like, even if you're wrong on this company, what that means is that you got in too early. That's it. You know what I mean? Like, if you buy a penny stock and you lose like 20% of your value, you don't have that assurance that's like, yeah, this thing is probably going to go up in the long term. Most of the time, it's just like you made a bad trade. So I like to buy, if I can, I'll swing trade reliable blue chips. But yeah, technical analysis is usually the main thing I do.
Cool, cool. So, Janek, welcome to the live stream. I appreciate it, man. Janek is asking, what would he go back and tell his younger self if he could go back in time? You know, if based on all the experience that you have so far, if you can go back. Yeah, I know you're already young, man, but he's only 24. If you can go back, I guess, 10 years or 14 years old, what would you do?
Yeah, last week.
He's asking you and I, Daniel. He's asking,
oh, me, you, okay, me?
Yeah.
Oh, okay.
Yeah. For me, it's easy, man. For me, it's like start a YouTube channel. That's it. That's the only thing I would say to myself.
No, he's asking us to ask him what would he go back and tell his younger self if he could go back in time. It's not about us, Jose, man. Come on, man.
Informed trades at Rico Suave. What would he go back to and tell his younger self?
But he's projecting that question so we can ask Alex, not us.
Oh, okay, all right. Well, Alex is like 24. What's he gonna tell himself? That's the old.
Come on, man. But that gives us a path to the question that I want to ask you. Like, what's like your advice to people, that want to start investing, for long term, or that want to get involved in the markets? Like, what's your advice? I know you got a lot of experience because you got involved in the markets very young age, thanks to your dad, because your dad taught you about all these different things that you can get involved in the markets. But what's your advice, for people, to if they want to get started?
Yeah, I'd say it probably goes back to like what I consider a good investment, which is the two buckets: observational stuff, which is, do I believe in the brands? The other thing is like the success metrics, like can they consistently increase their dividend yield? But I would really focus on the observational stuff. Like, I would say let's say 70% of the household products that we have in our house are owned by just a handful of companies. Like, we know what those companies are. We know, Procter & Gamble, we know Unilever, we know, Kraft Heinz, things like that. These are all really big CPG companies that it's really hard to not see their products if you're living in the United States, or if you just so happen to go by the grocery store. Like, most of the products that you see are basically 5 to 10 companies, whether they're food or whether they're other things. The CPG is such a, broad world, right? So that's just an example, is like, if there's companies that, especially in the United States, because the United States is like built off of capitalism and greed of companies. I'm not saying greed is bad or good. I'm just saying like, these are all things that are really important to the United States economy. And you see some of the companies that are front running that. Like, think about how hard it would be to do a home improvement project if there was no Home Depot, for example. So like, Home Depot is a staple of home improvement products and things like that. So that's just a part of our daily lives. Like, you go throughout your lives, if you want some coffee, the first thing you think of is Starbucks, right? So yeah, just kind of observe the world around you and see what's important and what sticks. And I think that would be my investment advice.
Cool. So yeah, but Gen X said for all of us, so Jose, you're right.
Oh,
so
no.
you want to tell us about, but like we were just focused on Alex, so I wanted Alex to get the floor and talk about himself, but okay, Jose, tell us about what would you do if you go back, tell your younger self, man, the young Marine at 19, right? At 20.
Soldier. It's easy, bro. Just start a YouTube channel. That's it.
Oh, what? 19 years old? YouTube wasn't even created back then, bro.
Whatever. Start moving the line, man. When the YouTube came out?
YouTube came out like 2008 or something.
Okay, well, there. Start a YouTube channel.
Okay, that's it?
That's it. It doesn't matter what it's about either.
Okay.
You can and just start sharing content online, and creating a following, and by now you will have 1 million subscribers easy. So.
Cool. You're talking about fitness, right? Talking about making some gains.
Yes, you can share, you know, my military career, whatever I wanted to share. You know, just start a YouTube channel.
Okay, cool. All right, so Dave said 2005. Okay, sorry, I guess 2005 YouTube started, I guess 2005, 2000, yeah. I think Facebook was the one that started 2008 or 2011 or something. Yeah, sorry, my bad, I mixed up. 2004,
what
yeah.
You do advice for your younger self.
For me, like I think, dude, I have to really think about it because you know I kind of like the way that that I'm at right now. Kind of learned all the stuff that I did, the experiences I experienced, kind of like taught me, kind of shaped me to kind of look at the world in a very kind of in a good way. So I'm kind of happy the way I turned out so far. So if I went back, I could have corrected a few things or told myself to not do some stuff, but you know, I'm not sure. I have to really think about, reflect, write a paper about it. You know, like, hey, well, I could go back and what do you want? So yeah, but that was a great question. It's a very reflective question, Gen X. Thank you for asking about that. You know, so, but yeah, guys, if you have any questions for for Alex, just drop in the comments. You know, we'll ask him. You know, and Manny says, I'm buying a winning lottery ticket. Yeah, of course. If you could go back, buy Bitcoin, Ethereum. Yeah, it's all of these things, you know, that come up. What's like a hindsight, right? If you can go back, there's a lot of I should have done that, I could have done that, especially when you're kind of in a winning trade and you sell off and then the stock goes above the price point that you're looking at. It goes so far. You say you're locking your profits. How do you experience with that emotion? Do you consider like, oh my God, I should have held, I should have not sold, or how do you cope up with that emotion, you know?
Yeah, that's a good point. I think at this point, it's just like, it's not really my full-time job, but I could say like it's part of the job. I'm kind of numb to a lot of the daily fluctuations and like just emotions and things like that. What are you laughing at, by the way?
Oh no, Ryan just made a comment about Daniel. You should have got that guitar, that girl, that what you should have done. yeah, this girl, you know, she took my guitar and then she moved to like 3 hours away from the area that I'm at, you know, so then I had to get another guitar, you know, so yeah.
Okay.
Oh, dude, it got dark. Okay, I'll be right back. Let me turn the lights on.
motion lights. Go ahead like this. There you go. You haven't moved in a while, bro.
Yeah, sorry about that. A tornado. No, I'm gonna joke that. Yeah, continue.
Yeah, what was I saying?
Yeah,
I don't really feel too many emotions when it comes to trading anymore. It's part of the process. Like, you know, you do anything 1,000 times and like the little emotions that you feel normally are going to go away. So it's just like anything else.
Yeah, emotion. Yeah, definitely. Yeah, because there's a lot of people I saw on the Discord. You know, shout out to Gen X Discord chat. You know, they were having this conversation about people. Dave said that there's people always say that, hey, I left this amount of money or I left this amount of cash on the table, but you never hear people say that they could have lost this amount of money. So you only focus on like, hey, I left this amount of money, this amount, I could have made this amount, but when you exit it, you know, you actually profited, you know, so you only look at what you could have made instead of what you could have lost, you know. So that was a good point, you know. So that's shout out to Dave, man. That was a solid comment that he posted on the Discord, you know.
Yeah. Honestly, I think like regret is is almost like a personality trait. Like there's just some people out there that just regret more. And there's other people out there that like, yeah, if they miss something, they still like go with it and just like take punches and keep on moving. So it's just like, dude, if you did something you messed up, like you can't change it. Like just keep on doing what you're doing, you know?
Yeah, definitely. So Gen X asking, like, how about what lesson have Blood Phantom learned about YouTube? What would he do differently or tell himself when he first started it, you know?
Yeah, it's interesting. I think I don't really have strong goals for my channel in terms of like subscriber count or like monetization. You know, I know there's so many things I could do better for my channel. I know I could do better thumbnails. Like I could probably take a picture of myself and have some text next to me for all my thumbnails. They'd probably get more clicks. I know I could buy a better camera. I know I could have like at least some kind of backgrounds, like rather than a white wall. It's literally like my bedroom wall. I know I could like do Robinhood walkthroughs and just say like, hey, this is what I bought this week. This is what I bought last month. And like, you know, there's a whole bunch of things that I know get more views, get more likes, get more subscribers, but like, it's not really my main motivation. So when I think about that question, I think like, okay, what could I have done better to get more subscribers? And it's like, well, honestly, I'm kind of happy where I'm at. Like, if I get subscribers that like my content for the content, then cool. But like, I don't want to get subscribers that like my content just because like of this other thing, because it's like it looks really nice or polished, you know. So yeah.
Cool. So you just like, yeah, you just like your channel is just about recording your journey. So this is a great way to do it. You know, you're talking through it. You're talking about how you placed your trade. Video, I think, is really awesome of like a diary. You know, instead of just like writing it, you know, you have like solid content online available. Also, you help other people, and also you can go back and reflect on your what decisions you made, what you could improve on, like after 5 years. You know. So that's a great way of actually documenting your journey. So it's really awesome.
I gotta say, Alex, I love your content, man, from day one. No,
thank you, man.
So you don't need no fancy, you know, equipment or nothing like that. It's all about, you know, the content.
Yeah. Alex is very laid back and very chill, and I like him too, man. Shout out to Jose for you know.
If I can give one more shout out to Jose, actually, honestly, I would say Jose is the reason why, number one, why I'm here. Also, Jose is the reason why I've become part of this community, because the first, you know, kind of the main reason why I even like started commenting on other people's channels is because of his shout outs. Like one of his big shout out videos was like, he was just giving shout outs like, hey, this is this channel, go check it out. They have 200 subscribers. Let's get them to 500. He did that for like 30 channels or something. It was just a video, right?
Oh yeah.
Like that's the first time I was like, wow, so we really have some kind of community that I wasn't a part of. On top of that, you have the live streams every Saturday, right? And it's like, you know, we can look on the right side of the screen and see all the consistent people that are coming in week in, week out and stuff like that. And like, you know, these are people that are like really friendly and like really nice to talk to. And it's like, yeah, you definitely opened up this world to me. So yeah, big shout out to you.
Well, thanks, man. We're glad to have you. Appreciate it.
Awesome, man. Jose, the MVP, man. Way to go, man. Jose. Yeah. So Baker said that I would like to see live videos about you trading what you're buying. You know, so that's a, if you in the future, if you want to make content like that, you know, it's really, really awesome, because like live trading, when you're at that moment, when you're making this decision, when you see your portfolio go up and down, things like that. I know when you actually make a video, I know that you make like 30 minutes before market close, so you can actually see the, you know, your portfolio go up and down a little bit. So that's kind of interesting to see all that ticks, you know.
I'm not actually sure if I would ever do live stuff, because I don't really day trade. So I have like, you know, whatever the market did, it's just like a recap. Like, this is what I did today, and this is what it's going to look like. Or this is, you know, what I think the market's going to do 2 weeks from now. You know, so it's never so much like, oh, this happened this hour, therefore the next hour I might have to do something different. So yeah, I'm not a day trader, so I'm not sure if live stuff would ever be interesting. But yeah, that's an interesting request if I ever do become a day trader.
Cool. Yeah. Sometimes when the market goes down a lot, you have to just just like hedge funds, you know, like Goldman Sachs, things like that, you know, so they don't do day trading and things like that. But if the market, there's like an extreme volatility, like they're ready, you know, they have people out there on the floor that want to go in there, make trades, so try to hedge their positions, or, you know, place trades and things like that, you know. So you never know what might happen. But Ryan said, Alex, result is where the quality is, man. Like, look at that, Ryan quoting that stuff, man. That's a great quote, man. Yeah, the result, man. That's really impressive. You used to, like, what was the portfolio size when you started? I think you started at like 16 or something like that, right?
Or maybe even less. Well, when I was, I think when I first opened the account, I funded it with like 500, you know. When I started doing financial videos, I think, I was like maybe 15 or 16,000. Honestly, I'm surprised, you know, because like not even I knew.
Well, I had to look at, so I can write on my Instagram post so people can go watch, because that's really impressive. I wanted to know exactly how you started, you know, from the beginning. So I watch your videos. Yeah,
absolutely. Yeah, no, good research. I think that was like sometime last year when I had like 16,000. So yeah. Sorry, what was the question?
Yeah, my question is, well, at the beginning, like, what was your initial size, portfolio size this year? So 16,000, you know. Also, you made a video about, you know, when you hit your 1K. So kind of walked us through exactly how your portfolio grew. So that's also one of the videos that I watched, you know. So that was really impressive, man. When I was like, wow, man, look at that, man. Man, he cheat fire. You know what I'm saying? Jose, right? Well, that's Jose's fire number, man. What do you think about that too?
Fire?
Yeah, like people retiring early. And do you see yourself like retiring? I know, like, that's how you started, you know, because you wanted to chill, you didn't want to work a lot or just have like extra time, leisure time to do whatever you want to do. So
Yeah.
do you brought up with that whole concept of like retiring early, financial independence and things like that?
That's a good question. I normally don't like to put labels on myself because I'm not a manila folder. You know what I mean?
Yeah. Fire community.
Yeah, I'm not like, oh, I'm this, I'm this, I'm this. Like, you
Not
know,
a minimalist, right?
yeah, like I believe, you know, men and women should be equal, but I wouldn't call myself like a feminist or like egalitarian. Like this is just, these are my beliefs. So I don't like to put names on things because then it sets like expectations, you know, like, anyway, I don't want to get into that tangent. As far as fire, yeah, I guess I do want to be financially free, retire early, all that stuff. But I wouldn't say like I have a plan in place. I mean, like, it's like, my goal is to make as much money as possible. I want to be a multimillionaire at a reasonable age. I don't want to wait until I'm 60 to be a multimillionaire. Like I want to be able to be rich so I can make an impact in communities and things like that. So yeah, obviously I want to get to a point where I don't have to depend on the job. Right now, I'm actually, I want to, you know, in the future, I would probably want a job because there's some things that I want to learn. I know that that's not what what fire is necessarily. But yeah, I guess so. To sum that up, to some degree, sure. I guess fire is kind of part of it, but like I'm doing nothing that fire people do, I think, other than the fact that I'm trying to grow my wealth. You know, like I don't have a budget. Like I don't think about how much money I spend. Like I buy Chick-fil-A 3 times a week. You know what I mean? So yeah, I'm just enjoying my life, but also trying to get rich at the same time.
Yeah.
Cool. Awesome, man.
Yeah. So have you had any more issues with the basketball and the heart pounding and all that? How are you doing health wise?
Yeah, no, I'm doing great. That was like a one-time freak accident, I hope. I think, yeah, the final diagnosis was like just inflammation around the heart area and the chest, but like it wasn't due to blood pressure or anything like that. I don't think they explained exactly why it happened, just that it can happen sometimes. But yeah, no, I'm fine. The only thing is I'm not that good at basketball yet, so still trying to get better each week, you know. So I'm still working on my game.
Nah, man, you lying, man. I can tell that, man. You said just the way that you said, you know, you're trying to make us. You're setting the bar so low so that when you play, you're gonna be like super high. Yeah. Hey, man, we should have a basketball tournament. You know, like I know Drew. You already made a video about that. He's making some 3-point shots and stuff. I was like, come on, man.
Wait, did I really?
Oh, you probably don't know Drew. Do you know Drew? He has No Dead Beloved, his YouTube channel. You probably know him. Yeah, but he plays basketball. Yeah, he lives really close by, you know, and we talk about it a lot, you know. So.
Perfect name for the tournament, bro. Investors Ballers Tournament. You know what I'm saying?
Okay. I like that. Who do we have playing on that? Is there anyone on the live stream that plays basketball?
Well, I know, like he was saying, Drew plays. I do a little, you know, I'm dangerous from the 3-point line. You know, I'm a good point guard. What about you? What position do you prefer?
The older I got, the more I tried to become a point guard, because like that's how you really win games, is like if you can distribute and like set the pace and like find open people. I think like when I was younger, I was a lot more selfish, so I was just like, let me try to score as many points as I can when I was younger. But yeah, now I'm starting to like understand there's more to it. It's like a team game. But right now, given my height, like I'm 6 feet right now. So I try to play like small forward or shooting guard. And it looks like Daniel just left.
Yeah, he dropped, but he'll come back on.
Okay. Yeah. So yeah, I think I play like small forward. I think I play most like Kawhi Leonard. Kawhi Leonard is probably one of the best players in the NBA right now. He's a really, really good defender, good at 3-point shooting, and just like everything actually. And I joke about it because like I don't show that much emotion either. And Kawhi Robot is kind of joked to be like this kind of robot because he doesn't show any emotion at all. So yeah, I also have that similarity with him too.
Absolutely. Welcome back, brother.
Yeah, sorry, I'm back. But anyway, yeah. But for me, I played tennis. Yeah, I play a lot of tennis. You know, so yeah, I play a lot. Do you play tennis, Alex?
I suck at tennis, man. It's so not for me, dude. Like I'm like, okay, the ball's gonna go this way, and like I'll swing, and it's just like, yeah, it shouldn't be that hard, but it's so hard to me.
Oh, dude, like, it's at first, you know, it's really hard. You have to really train a lot just to get the rally going. You know, you have to really, really focus a lot of time. You know. To really get to that point, you know. Yeah.
We got Ryan saying that he can hoop. We got Rick also saying that he can hoop.
Okay.
Yeah.
You know,
Man,
Manny
Rick,
saying great passer. So we need, we need a Scottie Pippen, and every Jordan needs a Scottie Pippen.
What's the central place between all we got me in California. We got Jose in Tennessee. What else we got around here? What's the central place? We'll schedule a meetup.
Colorado, right? I think we're Colorado. Yeah. I think, right? Yeah. We can ball. Yeah, I know Rick is probably, because he always attends like basketball games. So he probably knows how to play basketball. Man, he's at the Raptors games and he's watching. He's really into Rick. Yeah, he's into basketball a lot. Philly stand up. Biggie Bull Investor said, "Philly stand up." Yeah, man, Philly.
J-Mac is saying, get me in the core and I'm trouble. I get a triple double.
Oh yeah.
Woo! You said that, man. You said that.
Yeah, shout out to Ice Cube right there.
Yeah. But let me ask you about, what YouTube channels that you watch, or what movies that you watch, documentaries that you watch that really kind of like helped you, or you kind of watch for inspiration, for motivation on your investment journey, when you're trying to feeling down, or you kind of want to get some motivation, things like that. What do you watch? Who do you watch?
Yeah. I'll talk about the movies first. So I think I'm glad you said inspiration / motivation, because I generally wouldn't learn too much from like stock market related movies, because they're usually all about the fame and like the glam, and obviously like they have to make movies that regular people can enjoy too. So like they have to kind of dumb it down a little bit. But yeah, as far as my favorite movies, I really love The Big Short. It always inspires me, man. Even though I'm not much of a fundamental guy, like just the fact that this guy was able to stay ahead of the curve, profit off the 2008 recession, and he probably made money on the way up too. Like that is awesome. That's definitely what I want to do too. And then I love all the characters. I love Steve Carell, and things like that. And then the other movie I really like is, it might be kind of out of left field, but The Wolf of Wall Street, I really like.
Yeah, everybody likes that, man.
Yeah, it's super cool. And there's one scene. Hey, there you go. You got to send it to me.
Yeah, participating in the live stream.
Yep.
Jose retired from sending DVDs though. But anyway, continue.
Oh, no.
Okay, that's fine. Anyway, what was I saying? Oh, yeah, Wolf of Wall Street. The reason why I like it so much, I mean, obviously it's really interesting. It's really well made. Each scene is just beautiful. I think the actors are great. But one thing that sticks at me is in the beginning when he's talking about how much all the different types of drugs he does. And like, I don't do drugs, but he's talking about that. And he's like, but my favorite one of all. And then right when he says that, he like snorts a line. And he said, oh yeah, he's like, it's not this. And he pointed at the ground, meaning it's not the powder, but it's this. And it was a $1 bill, which he used as like a straw. And he said, if you have enough money, if you have enough of this, it will make you invincible. It will allow you to eviscerate your enemies. Heck, it might even make you a better person. And so, yeah, I firmly believe that wealth is power. And the main reason why I want to get so rich is because I want to be able to make an impact in whatever I want to do. You know what I mean? And also in the movie, he said, if you have money, then you can do anything you want to do. Like you can even save the spotted owl if you wanted to, right? Which is so true. Like if you think about it, like if Jeff Bezos, Bill Gates, Warren Buffett got together and they're like, hey, we literally have, 20% of the world's wealth or something ridiculous, right? That's just a random number, but like we have so much money. How can we solve like each of these problems? I'm pretty sure we could get a lot done. I'm not saying I'm ever going to be to that level, but yeah, I do want to be to a level where I can, if I see something that I can fix, I would like to fix it. So yeah, Wolf of Wall Street, Big Short are movies I really like. As far as YouTube channels, so I think obviously all of ours, like we got a nice little community going. Like I always like your guys' videos, comment on your guys' videos, things like that. Just like good people all around. As far as those that I especially look forward to, meaning those that challenge me, those that make me learn something, things like that. PPC Ian might be my favorite one. I used to like Joseph Carlson a lot more, but he started to like annoy me a little bit, to be honest. Yeah, I don't think he goes into the stocks too much. Also, he's just like I don't know. I don't want to get into it. But anyway, so PPC Ian, Joseph Carlson are probably big ones. Oh, and then there's some videos or some YouTube channels that probably most of us haven't heard of that like really just were so important for me to grow in terms of technical analysis. The one I watch the most right now, his name is Chris Chiovaco. I might make a video later just talking about all the YouTube channels I follow, but man, oh man, does he deliver some high quality stuff. talking about, keep an open mind, look at the stuff that really matters out there when you're investing in the stock market. Like, what's the hard evidence out there? Like, a lot of people say, oh, the stock market's going to go down because of Trump trade war stuff, right? Which, like, may or may not happen. I think he really looks at objective data. These are reasons why the stock market may or may not go up, but let's be open-minded about it. So that's Chris Ciovacco. And his last name is spelled Ciovacco, if you guys want to check him out. This other YouTuber I like, he doesn't make too many videos, but he does the same kind of analysis I do. His name is Canon Market Analysis. I think he's really great too. I might be forgetting others, but basically on the fundamental side, PPC Ian is #1 for me. And then on the technical side, Chris Ciovacco is #1 for me. And the last shout out I'm gonna give is to someone named Charting Man Dan. I've never met Charting Man Dan in person, but I've commented on his videos and I'm like, dude, you're my mentor, because I watched his videos for like a year and that basically taught me everything I know about technical analysis. He does daily recaps and I think he's really great. So if you want to learn about technical analysis on someone who's actually going to teach you and go over things every day, Charting Man Dan is the guy. Yeah.
Awesome, man. Dude, you should make a video about that. That'll be a great topic. You need to make a video about it in detail, talking about like the YouTube channels, that you like and things like that. Because the Ciovacco, Chris Ciovacco, right? YouTube. Yeah. I just Googled it right now. Is it Ciovacco Capital? Is that the YouTube channel name? All right, Google.
Maybe that's he has like his own little investment fund.
Yeah.
Name of his fund. That may be his name of his channel, but I'm not sure. But yeah, that's the guy right there.
Yeah, Ciovacco Capital. Yeah, because I went on YouTube and talked about Chris Ciovacco. Yeah. But yeah, that's awesome, man. It's also the books you mentioned about the books. The Rich Dad Poor Dad, and the technical analysis book that you kind of forgot. But yeah, awesome, man. YouTube channel. You got your movies. I like the Wolf of Wall Street too. Have you seen what was the name of the movie? Wall Street. With yeah, I like that one too. Have you seen it? Yeah. There's like Wall Street part. There's part 1 and part 2, I think. Yeah.
Okay, haven't seen it.
You seen it, Jose? Right? Wall Street. He's talking about Gordon Geico, talking about like greed and all that kind of stuff.
Yeah. Geico is the little lizard thing.
Oh yeah. Sorry, the Geico. Yeah, the Allstate, right?
Alex just said, if you noticed, he didn't even mention Financial Freedom, Ryan Scribner, Graham Stephan, none of those, which leads me to believe that he's more worried about like the real, I don't want to say real content, but those become more the entertainment side of the house. He's more worried about the informational, like for real stuff that can help you out. So
yeah, like I don't know when the last time I actually learned something from a Grant Stephan video. Like videos are such high quality, but it's like, dude, it's just recycled stuff. It's like, this is how you become a millionaire. He has a YouTube channel. It's like, well, it must be easy to become a millionaire when you have 3 million or like 100 million subscribers, whatever the hell he has. Obviously that's a joke, but like, yeah. So yeah, thank you for pointing that out.
Yeah, definitely. Yeah, I like Stephen Graham's videos. Like they're very informative. The first time I watched him, I was like, oh wow, he really puts his time and effort to really know his information before he kind of makes a video about it.
Mm-hmm.
So that's really, really awesome. So thanks, Rick, for joining the last stream. He said thanks, the 3 of you, for putting this stream content. Yeah, thank you, Alex, for joining the last stream, man. You wouldn't be possible if Alex didn't make it.
Yep. Thank
you.
Appreciate
it. We really appreciate it. Yeah. Thanks for watching. Yeah, guys. So if you have questions, for Alex, just drop them in the comments. We're approaching the 2-hour mark, and yeah, we covered all the majority of the questions. Biggie Bulls. Yeah. But I think Biggie Bulls, he posted a video, right, Jose? Is that, let me go check out his channel.
Video on his 3-year anniversary of his portfolio. He reached a 41,000 milestone. So we're very happy for him.
Yeah, congratulations. That's a huge achievement. I know like the 100K was a huge achievement for you, right, Alex? When you hit it, that's a huge milestone, especially when you started with like 5G. I mean, with 5 figures, and then you were 6 figures. That's pretty good.
It feels nice. I'm not gonna lie. I mean, I think the thing is, I thought about it so much that by the time I actually got it, it was like the 53rd time that I got a 6-figure account. You know what I mean? Because like I envisioned it just happening over and over and over again. So like when it actually happened, I was like, oh, okay, it's actually here, which is cool. I mean, it looks really nice. You have an extra digit on your account, which is, really great. But yeah, definitely. I mean, if I had woken up one morning and all of a sudden I had six figures, it would feel a lot different than what this currently felt, because it was just like such a process. So it didn't feel amazing, I'm not gonna lie, but it still felt really good.
Yeah, definitely. It's not like a lottery ticket, or you made this huge option, so you got lucky on option, you bought a lotto, and then it went all the way to 100,000. You actually had to invest time, do research, do stuff like every single day to get to that position. So it kind of it's like a long process. So that's a great way of doing it.
I can relate completely to that, because like it's the same thing when you like working towards your master's degree. You've been working so hard for the last 2-3 years that when you achieve it, it's like, whew, okay, I achieved it. But I don't know, you're already there at that point where, you've been, working so hard for the last 2 years. When you finally achieve it, it's like, it doesn't, like, I don't know, it feels unreal, or it hasn't hit you yet. You know what I'm saying? I just got mine, like last week, right?
Oh, congrats.
And I should be very proud. I should be over the moon. I worked so hard for it for 2 years. You know what I'm saying? Only 9% of Americans has a master's degree. So I should be over the moon right now. But I just, like, it hasn't hit me, or I don't feel it yet, or whatever, because it was so much work went into it, so many late nights and stuff like that, so much sacrifice, that it feels like a relief. But it just, you know what I'm saying? You know what I'm saying, Alex? It's like, you probably feel the same way with your account.
Absolutely. I think that's actually something that really successful people do too, and maybe this is something you thought about as well, but like successful people, when, let's say we're talking about an athlete, let's say a track runner, maybe a sprinter or something like that. One technique that a lot of coaches do is they have their athletes sit down and just visualize their goals and visualize them being in that moment, so that when they're actually in that moment and about to achieve it, it shouldn't feel like something new, because feeling like you're in something new is when you're not yourself, right? Like, these athletes have been training all the time, so it should feel just another repetition. If it feels like something new, you're not going to be in the right headspace. So yeah, visualization is super, super powerful.
That's what it is.
So have you visualized your account, like see 6 figures and then like $1 million? Have you done that?
$1 million not yet,
because you already have it in your head.
So. Yeah, exactly. And I think, what's funny is this, around New Year's, my dad actually, he was like, okay, we're going to start to think about our New Year's resolution. So he was thinking about his, he started writing his down, and I was there in the room with him. And he started talking about, like, I don't know how this topic came up, but we started visualizing our goals, or he was showing me a video of someone visualizing their goals. And in that moment, I just envisioned 100,000, just like for like 2 minutes. And sure enough, what month is it? Yeah, 12 months later, I got it. So yeah, it happened.
That's awesome. Law of attraction, right, Jose? The law of attraction for visualizing. Yeah, it works. Yeah,
well, you can achieve.
So.
Yeah. Definitely. Yeah, that's what. Do you set some goals, like monetary goals too, on your account, or you just? I know this is like a huge goal, like $100,000, but every month, do you have a certain, like, I need to make 10% of my account, or 50%, 5% every week, that kind of stuff?
That's a good point. I usually don't do that just because I don't want to put myself in the wrong place. Like, for example, if I have pressure to make 10% every month, then I might do something that I shouldn't be doing if I don't hit 10%. My goal, I do have yearly goals though. My yearly goal is 50% every year, which is very hard. Obviously, like, I'm sure there's going to be some years I don't get it, but I think there's going to be some years where I kill it. Like this year, I'm at 93 right now, 93% so far. And the year's not even over, right?
Yeah, dude, we got some. Yeah. And then the Santa Claus rally might hit up and you might be like 100% or something. Yeah.
Yeah. So yeah, 50% as my goal. But I mean, it's good to set hard goals, because if you set goals and you hit them all so easily, then your goals aren't hard enough. So yeah, 50% every year, because that would mean by, in 8 years, I'll probably have close to like 3 million, I think, or 4 million, something like that. But basically 6 million is my magic number, where I would take that money and probably just, dividend growth investing maybe. Or if I'm feeling really ambitious, I'll just, put a little bit to work, maybe like 3 million to work, and have the other 3 million to just like try to do it all over again. So we'll see. But yeah, I expect to be a millionaire, like a multi-millionaire, by the time I'm like 32, 33. So
nice. Yeah, that's a great goal, man. That's a solid goal. So are you just gonna stick with Robinhood, or are you gonna change brokers? With that amount, like $1 million on Robinhood,
It's funny because I might be like the only, if that happens, I like, hypothetically, I'd be the only one with like multiple millions on Robinhood still. But I don't know. I don't see any reason to not use Robinhood, to be honest. Like, it's been good to me. And there's like these other brokerages which I haven't really used. I guess they're like more professional, so I guess we're supposed to use them when we have bigger accounts. But yeah.
Yeah, solid. Yeah, man, Robinhood is great if you know what you're doing. So yeah, guys, if you have any other questions for Alex, thanks a lot, Alex, for joining the live stream. We really appreciate it. Thank you, Jose. Jose has been sick, for the past, I'm not sure. He didn't look sick on his video when he had on his gym flexing his biceps.
That's because the video was recorded last week.
Oh, okay. Yeah.
Edited this week and it came out this week.
Yeah, no, that was a solid video, man. The day in the life of Jose working out, man.
Your chest looked huge. You were like doing some flies. I was like, dang, Rico Suave, like he's swole.
Thanks, man. Thanks.
Swallow, man. So yeah, guys, if you have any questions, guys, just drop in the comments below. But as I said, thank you, Alex, for taking your time. Really appreciate the positive feedback that you like our live stream. We appreciate that. And yeah, if you guys don't have any questions for him, then make sure. Do you have any videos coming out, Alex?
Yeah, I'm actually gonna make a really cool video if I get to 100% on the year. It's gonna be me showing my account like on the past day, week, month, whatever. That's the only thing I have planned, to be honest. Whatever happens. But yeah.
Cool. How about Jose, man? You got any why we buy, why we sell, why we short, why we go to the gym videos coming out?
I will do how to invest in stocks, 5 easy steps, episode 6. And don't know what company I'll be covering yet, but I hope you enjoyed my last one on Procter & Gamble.
Oh yeah.
Yeah. Jose spent a lot of time, making those videos, getting all that information and things like that. So we appreciate that. And thank you all good for joining, for really being on the live stream. We really appreciate it. She said, thank you, Daniel, Jose, and Alex for a lively and informative live stream. Loved it. Just sub to Alex's channel, so that's really awesome. So yeah, thank you all good. You're definitely gonna like, Alex's YouTube channel. He talks about what stocks that he's looking at. You got the technical analysis and things like that. So, and thank you also, Tasha. Well, that's a great goal. Yeah, that's a really awesome goal. That's what you have to visualize. I know Tasha talks about visualization too on her channel too. So yeah, and Dave said Jose wasn't sick. He was hanging out with Kitty. Oh. Really, Jose, man? Yeah, Jose be sick and he's like, oh, I don't have any time to watch your videos and comments. Well, he watches like Dan Log's video. Like, come on, right, man. Come on, Jose. But yeah, guys, thanks a lot for joining the live stream, guys. We have like 3 minutes. We have like 2 minutes left, I think, for 2 hours. If you guys don't have any questions, you might finish it. And yeah, Alex, any last words?
No. Subscribe to my channel if you haven't already. Yeah, invest in yourself, I'd say, is the best thing you can do. Yeah, I'll leave it off with that.
Awesome. Yeah, that's a great way. Invest in yourself. Invest in the long term, dividend investing, and all that. Jose, the last words, right?
No, just Alex. Thank you so much, man, for joining us tonight. I really enjoyed it, and thank you for sharing all your knowledge with us and all that. And like I said, I love your content, and I encourage everyone out there to go inside, and subscribe to your channel and stuff like that. Oh, cool. And thank you everyone to tune in tonight. As always, we love you guys. We wouldn't be here without you. So
yeah, guys, everybody that Dave, you got All Good, you got Tasha, you got Ryan, Manny, the average investor. Thanks a lot, man. Thanks for joining the last stream. We appreciate it. Rick, we got Baker, we got a lot of people. Thank you also for Marie for the super chat. I appreciate that, and thanks a lot. Victor also, sorry, I just saw your comment. Victor, man, thanks a lot for joining the live stream. We appreciate that. Hope you guys have a wonderful day and a wonderful week, guys. It's a Christmas is approaching, so we're gonna do live stream for Christmas now. It's gonna be dope. Yeah. All right, guys. Have a wonderful night, guys. Thanks a lot.
All right, see you.